Good afternoon and welcome to Capital Account. I'm Lauren Lister here in Washington, D.C. These are your headlines for April 3rd, 2012. U.S. President Barack Obama gave a speech accusing Republicans of social Darwinism with the budget and its cuts that they passed in the U.S. House of Representatives last week.
It is antithetical to our entire history as a land of opportunity and upward mobility for everybody who's willing to work for it.
But how much opportunity is there really left exactly in the U.S.? We speak to Dr. Marc Faber, publisher of the Gloom, Boom, and Doom report, who says wealth destruction and social unrest may be on the way for Western economies. And yesterday, Wall Street had a strong start to the second quarter with the S&P 500 marking its highest close since mid-May of 2008. And then today, we saw that come down as FOMC minutes came out and revealed that the Federal Reserve is holding off on more monetary easing unless U.S. economic growth falters or inflation goes below 2%. So is this risk off, risk on? And what does it mean for the economy that this is the way we're always looking at things? And we've heard talk of the possible student loan bubble, a more than $1 trillion debt problem. Well, it appears some senior citizens are on the hook for it, along with kindergartners. We'll explain. Let's get to today's Capital Account. Now, as we've seen stocks rise to their highest level since 2008 and then fall a day later as FOMC minutes indicate, hey, maybe the Fed isn't looking at more quantitative easing at this point, it brings us back to one of the perennial debates. We've had it on this show before, the inflation-deflation debate. So you have traders basing decisions on whether they think central banks are going to be successful in inflating asset prices or risk on, or unsuccessful, and we see deflation of asset prices, risk off. Now, you could also say that this is a battle between the market economy and the economy desired by policymakers and their models. Now, earlier, I had the pleasure of speaking with Dr. Marc Faber. He's founder of Marc Faber Limited, publisher of the Gloom, Boom, and Doom report, also author of many books, including our producer Dimitri's favorite one, this one, Tomorrow's Gold, Asia's Age of Discovery. Now, Dr. Faber told me the issue of inflation and deflation isn't that simple exactly because inflation is the increase in the quantity of money and credit, and there are symptoms of it that can show up as higher wages or food prices, etc. But the problem of printing money is that no one knows exactly where it will flow. So in the 90s, you saw it flow into the NASDAQ, and then there was a collapse. And then it went into real estate. And when that collapsed, later it went into emerging economies. So where does he think the money has flown now? Listen.
The money has flown into predominantly equities since October 4th of last year, when the S&P was at 1,074. And we went now to over 1,400. So, the difficulty is you don't know for sure where the money will flow to, and the money flows into one asset and then into another one. The problem being that they are all at the same time with the same intensity, and then bubbles are built and then they deflate. So the issue of inflation and deflation should be essentially the question, which asset prices are going to be inflated and then will collapse.
Where do you think we are right now? What do you think has been inflated and what do you think is going to collapse?
Well, the ego of Mr. Bernanke has been badly inflated. But aside from that, and by the way also of Mr. Obama, but aside of that, I would say government debt is badly inflated. And also if you look at the income and wealth distribution in the world, we have had a tremendous inflation among the so-called 1%. They're not even 1% of the population. There may be 0.25% of the population, people with 100 million and more. And these people, they have become immensely rich. We have, billionaires. When I started to work in 1970, in the 70s, there was one billionaire in the world, Mr. Ludwig. And then in 1980, because of the oil wells creation, we had 8 billionaires. Now, officially, there are 1,200 billionaires, but actually, a lot of billions are not known by Forbes. So my estimate that there are at least 1,500 billionaires in the world.
You know, my question, since you did mention the 70s, I want to kind of compare to when you were coming up as an investor in that time in terms of how much people were guessing and questioning what impact government policy and central bank policy would be in the way that we see it today with, you know, every time you turn on the TV, it's this discussion of risk on, risk off, people guessing and betting at government policy and its impact. How similar or different is this from when you were coming up as an investor, for example, during the stagflation of the 70s?
Well, I think you're asking a very important question, because the central bankers and, say, the financial people will tell you, well, the bailouts were necessary and the money printing was necessary because otherwise the crisis would have been much worse. But actually, if you look at the origin of the crisis and the causes, they were actually interventions by the government, notably the interventions by central banks by keeping interest rates artificially low that created the bubbles in the first place. And don't forget, one of the big policy mistakes was the bailout of LTCM in 1998. And other policy mistakes included Fannie Mae and Freddie Mac, two fraudulent organizations that were so-called government-sponsored enterprises. Both of them went naturally bankrupt like no other company before. But what do you expect? Whatever the government does, it does it much worse than the private sector.
And so it sounds like you are saying that it's gotten worse. My question is, we live under this assumption that the U.S. is a free market economy. Where do you think we are? Do you think it's fair to say that we live in a market economy anymore, or is it mostly market-driven, or is it worse than that? Where are we?
Well, I think it's the same question. We have democracies in the Western world, but are people really free? When I travel through the U.S. and through immigration and through airports, I don't feel like a free individual at all. And so I think that the interventions by governments into the marketplace have actually destroyed the market. And if you think about it, we have zero interest rates, but we have cost of living increases of, say, 5% to 10%. So people who have been savers, they now have, say, $1 million or $10 million on deposits. They're honest people. They never speculated in their lives. They lived off the interest on their deposits. And now they get zero interest rate, but because of the cost of living increase of 5 to 10% per annum, their purchasing power is diminishing by 5 to 10% per annum. In other words, they are faced with an expropriation by the government, but it doesn't sound that way. It's not obvious to everybody that it amounts to this expropriation. But it's like if you would have a deposit in a bank, $100,000 at the beginning of the year, and at the end of the year you only get $95,000 back if there was zero inflation. That is the same thing than having, say, 5% inflation and zero interest rates. Your purchasing power loses by 5. And it's basically killing decent people, and it's forcing actually people to speculate in something.
Yeah, or forcing people to just be financially repressed if you're a saver in the U.S. and you don't want to take that risk. And you've been very clear as far as what you think the Fed's going to do, that it's going to print money as far as the eye can see, and that central banks in general will continue to print. So given the fact that we've already seen a massive amount of money printing in the U.S., it's really only been effective to paper over a lot of problems in the economy. My question is, given the monetary system and the way that it works, is it even possible for central banks to achieve what they're trying to, no matter how much money they pump out?
That is a very good question. You know, this money printing works until it doesn't work anymore. But the difficulty is to know on which day or which year it won't work anymore. But basically, Whoever believes that central banks can control economic activity, like someone would drive a car and press on the accelerator and then on the brakes, that is not the case for central banks, nor for any planned economy. And we've known now, after the experiment with socialism and communism and the planned economy, what a complete disaster government interventions into the marketplace have been. But this is precisely what the Federal Reserve and the Treasury are trying to do. And for sure it will fail over time. But it may work in the sense that the stock market goes up for a while and could go up massively. I mean, I've seen high inflation countries like Brazil or Argentina or Mexico or Germany, and during the money printing phase, stocks sometimes went up like 500 or 1,000 times within just 1 or 2 years. And then the whole system collapsed, but the whole system. And this, I think, will happen.
Well, what do you think it'll translate to politically when you say that? Because I know you said eventually we'll see social unrest or politicians will take us to war. So what kind of wars and who's going to be fighting them?
I wish I know what kind of war. Right? The only thing I know, the U.S. has been very good at finding enemies anywhere in the world when they wanted to find someone. But I would say my timetable is like this. If you look at the last 20 years, the money printing has essentially benefited a very narrow group of people, the so-called 1%. As I said, I think it's the 1%, it's the 0.25% of the population. And the large part of the population, say the 50% lower income groups, in other words, the middle class, the lower middle class, and the working class, their standards of living haven't increased in 20 years, basically.
That's right.
And they are more indebted than 20 years ago, and the US is more indebted than 20 years ago. You just have to look at the student loans. The student loans now are over $1 billion.
Yeah, student loans more than $1 trillion.
They will be repaid. But anyway, so they will continue to print money, not right away with the S&P at 1,400. But say the S&P drops 100 or 200 points, for sure there will be money printing. For sure there will be QE3. If the S&P drops to 1,000, there'll be QE 4, 5, 6, whatever. And it won't help the economy really, and it won't help boost the standards of living of the middle class and the lower classes, but it will help people that own shares and gold and maybe some real estate in selected areas. But discontent among the population will grow. Then the next station is, how do you distract the population? So you either target a minority group, say, we've seen now attacks repeatedly against Goldman Sachs. I think they're unjustified because what Goldman Sachs did, all the others have also done. They're no exception. And if that doesn't happen, they'll go to war and they'll find an enemy and say the enemy is threatening us and we have to kind of hold the system together and fight the enemy and so forth. And then eventually the whole financial bubble will be deflated, the whole derivatives market. There are, I don't know how, a quadrillion derivatives outstanding in the world. You can't imagine what quadrillion is. It's 1,000 trillion.
Yeah.
And this whole bubble will be deflated one day, and I mean, there will be massive wealth destruction.
Still ahead, at one time, about a decade ago, Dr. Marc Faber's advice for young people involved moving to Asia and concubines. Well, you will not believe what he says now as far as advice, how times have changed. You'll hear it after the break. But first, your closing market numbers.
We just put a picture of me when I was like 9 years old on To Tell the Truth.
I have a confession confession. I am a total ghetto princess. I love rap and hip hop music and Christian music.
I thought he was kind of a dick yesterday.
I'm very proud of the role that Al Jazeera has played.
You know how sometimes you see a story and it seems so whole and complete, you think you understand it, and then you glimpse something else. You hear or see some other part of it and realize everything you thought you knew, you don't know? I'm Tom Hartman. Welcome to The Big Picture.
What drives the world?
The fear-mongering used by politicians.
Who makes decisions?
Considerable breakthrough has already been made.
Who can you trust?
No one who is imbued with a global missionary zeal.
Where are we heading?
State-controlled capitalism is called fascism.
When nobody dares to ask, we do. RT, question more.
Welcome back. Our guest is Dr. Marc Faber, fund manager, also publisher of the Gloom, Boom, and Doom report. Now, before the break, he was talking with me about the political consequences of the wealth destruction that he predicts is coming, and these include growing discontent and attempts to distract the discontented, in his view, and also the prospect of war. So I followed up. The Bolshevik Revolution happened during World War I. Is there a threat there could be some kind of major revolt similar to that in countries like Greece or Spain, for example, where the public debt will jump to its highest level since 1990 this year as their economy sinks into recession and the country is under intense pressure to cut its deficit and repay its debt without outside help, or even the U.S.? You know, could we see social unrest become an even bigger force for change than war?
Yes, in countries like Spain or Greece, when the population is faced with austerity and salary cuts and pension cuts and so on, they scratch their heads and they ask them, where did all the money go? And then they find out it went to several government officials and a few rich people. And of course, they're not happy about this. And then it can lead to social unrest, yes.
Mm-hmm. And, you know, you've suggested that rural real estate might be a good buy because, hey, at least people won't bomb your roof. So is this why you've recently been suggesting buying real estate in southern U.S. areas like Florida and Georgia, outside of major cities, of course?
Yes, I think if I look at the future, I think for the last 5,000 years, cities offered security because they had city walls and essentially they had fortresses in cities. So the people in cities were actually better protected than the countries in this countries where, say, roaming herds of adversaries or hostile forces would pass through and just clean out everything. But nowadays, I think that cities are very dangerous because, say, if in New York City or in Washington, D.C., they switch off the light or the electricity or the internet or the mobile phones, you have a major problem, which you wouldn't have if you live in the countryside in your self-contained home.
Mm-hmm. So is that why you've been suggesting some of these real estate opportunities in the southern U.S.?
Yes. And I also suggested that if you buy a farm, you have to have several concubines that look after the farm.
Concubines are an important thing. You know, that's not the only time you've suggested it. That's not the only time you've suggested that. In Tomorrow's Gold, you had an interesting recommendation for young people that involved moving to Asia, starting a business in Asia. I think it involves some concubines, perhaps, some other colorful things. So what recommendations would you give to young people now in their 20s and 30s?
Well, I mean, the best recommendation I can give is that in the Western world, the generation I belonged to, I was born in 1946, and in the 50s and 60s and 70s and maybe even early 80s, everything got better for us. You know, salaries went up. When I left university, I could choose many different jobs, not a problem to find a job. But with the breakdown of the communist and socialist ideology, there's 3 billion people that joined the global economy. And because of the internet today, these people can be educated very quickly. They can learn without having to buy a book. Because say if you're born in a small village in India and you have to buy a book that costs $50 US, you just can't afford it. But nowadays you can essentially read everything on the with a computer. And so you have among young people much more competition. And I think the young people in the Western world, of course there's some geniuses that invent Facebook and God knows what, .com. But say the majority, they have now a huge competition from people that are hungry. These people, they never had anything in their lives. They see the standards of living in the Western world. They want to achieve that, and they're prepared to work 7 days a week, essentially 24 hours a day, and 365 days a year. And that is a huge competition. And so I think young people have to lower their expectations. And I believe the mentality in the Western world is this entitlement society, where, you know, everybody says, yeah, I like the market, we have to have free markets and a capitalistic system. When something goes wrong, yeah, the Papa state should help, give me benefits and God knows what. That has to be changed, this attitude.
So he's basically saying lower your expectations or be hungrier. In either case, a little more bleak than moving to Asia and getting some concubines. I'll leave you on that note. That was Dr. Marc Faber, fund manager, also publisher of the Gloom, Boom, and Doom report. All right, I don't know how we can come after that, but we're going to try to wrap it up with some loose change. We have Dimitri and Shannon. Marc Faber mentioned student loans. We know they're more than $1 trillion. He doesn't think they can be repaid. Well, look at this. It's not just college students, people in their 20s, 30s that are owing money and need to pay these loans. Statistics just released by the Federal Reserve Bank of New York say that Americans aged 60 and older still owe $36 billion in student loans. These are senior citizens, okay? And it also seems that some parents are saying bring on the debt and lining up for it, just like these competitive kindergarten parents. Take a look.
Those little launches you normally would see camped outside when it's like, what, Black Friday, and you're trying to get deals there. But the deal here is just trying to get the children into the kindergarten, because kindergarten starts today.
So they're camping out for their kids to get into kindergarten. And you've heard how competitive parents are in New York, I know particularly. Well, now parents are getting student loans for their children as young as 5. According to Smart Money, which is one of the largest providers for loans for K through 12 education, they're on track to finance $20 million in loans for the 2012-2013 school year. And just to give you some context of how that compares, in March, the dollar amount of these loans was up 10% compared to a year ago. So is this student debt bubble going to encompass the entire population, from kindergartners to senior citizens? And for what? The jobs that are available aren't necessarily jobs that require a college education.
Right, I agree. And it's not just that. There is the student loan bubble. The American education system is a joke. Some of the dumbest people in the world are the people that come out of this system. Okay? Yeah, you have some good colleges, but the reality is people take on all this debt to get an education that ultimately they ended up smoking pot and getting wasted and don't even remember 95% of their college time, right?
Okay.
And by the time they're out, they don't know anything.
I don't know about that. Being someone who did value education and did very much value my education and benefit from it, With student debt, though, I should say, I think that the bigger picture here is evaluating what you're coming out of school in order to do and kind of analyzing it more on a cost-benefit basis, more of a risk analysis basis. You need to really look at it that way as a business because you're not going to necessarily get some high-paying job to pay back these loans, especially not if Marc Faber's predictions are right.
Yeah, and that goes hand in hand with what I'm saying, though. People actually go to school and they have no real, they don't see it. They're entitled to their college experience in America, all right? But they don't actually think about the education. They're not like, oh, I want to learn, I'm hungry, I want to succeed. No, they're like, I want to go spend 4 years and hang around in a dorm and have fun and go from dorm to dorm and smoke some pot and drink some alcohol, and that's my college education. Unfortunately, that's not going to cut it anymore. And you got a lot of people whining about it because they can't find jobs, but they should be spending more time learning in school as opposed to racking up debt for a worthless education.
I do think you're onto something with kind of a middle-class entitlement to college education that doesn't necessarily value the classroom experience every day. Shannon, do you want to jump in here?
Jumping off of that, I think the lower you go for age, I feel like these are helicopter parents thinking that their children are entitled to a private education and the best primary schools and high schools and things like that, whereas you never know if your child's really going to live up to that.
Well, the parents are probably idiots, too.
And they'll end up saddled with all of this debt.
They're raising idiot children.
They'll end up
saddling them with debt.
No, they will end up saddled with the debt. If you're taking out a loan for your kindergartner, I hope the kindergartner is not on the hook for that.
Yeah, Americans
let's move on because the hope of revitalization for Atlantic City is in the air. Their brand new casino, the Revel, is the first to open in the city in 12 years, $2.4 billion. It was halted during the recession, but the governor, Chris Christie, put all of his chips in, offered $261 in tax credits to be used for economic redevelopment. So will the House win? Well, here's how gaming is going in Atlantic City.
Gaming revenue for this city is down 36%, and this year Atlantic City is forecast to cede its second ranking in the country as the nation's second largest gambling destination, I should say, to Pennsylvania. Now, amid this...
So is this essentially the only hope for the U.S. economy is to bank on vice?
Right. No, this is the American business model. It's prisons, right? It's Kaiser's casino gulag state. So you have lots of prisons and lots of casinos, all right? And this is the casino version. You basically bid up people's hopes, all right? And if they win, they get a chance to be part of the reality TV show or on a casino. And if they lose, they go into the gulag.
And it's not just vice in the U.S. I should mention that in Canada, a recent court ruling made major moves to decriminalize laws over prostitution. So maybe this is more widespread. We're going to have to leave that for another day, but you can decide for yourself and let us know on our website. You can give us feedback at youtube.com/Capital Account because that's all we have time for. Thanks for tuning in. Don't forget to follow me on Twitter at Lauren Lister. And from everyone here at Capital Account, thanks so much for watching and have a great night.